Turning out to be a day which is in fact quite heavy in terms of news, and we have the Hero Motor sales which are flashing on your screen. In fact, there are some comments which are coming in from the management. There is an urgent need to reduce the GST rate. The December auto sales have been disappointing for most auto companies, and the total sales for them have come in at 4.53 lakh units as compared to an expectation of 4.8 lakh units. So there is a plea by the management to reduce GST from that current 28% to 18 odd percent. So those are some statements which are coming in. Well, it seems as though the cry from the auto industry is definitely that there is a slowdown which is taking place at this point in time. There are inventory levels which will possibly ease, and there could be a possible pickup come Q4. But as of now, the numbers for December have been unequivocally disappointing. Hi, Prashant.
Ekta, hi. And, you know, I'm actually a little surprised by the comment, because usually these monthly sales numbers are...
don't come with commentary.
There are no comments. I mean, it's a drab fact sheet with, one-page thing, maybe two with just the breakdown of the models, the categories, etc. And this is the numbers. But there is a comment as well, Pawan Monjal saying, as you said, that GST rates need to be brought down to 18% from the current 28%. I mean, the numbers are below expectations. 1.65 is what the stock is down by. 1.8 now, slipping a little bit more. You know, I just like to point out, and we've been highlighting this all through since the auto numbers started to come through. Starting this month, we will also get the retail sales numbers. Which basically, I mean, so the numbers that you see on your screen are wholesale numbers, which is essentially what leaves the factory gates to dealerships. And the dealerships then sell to, individuals who want to buy these products. So what we get is what goes to the retail outlets. But for the first time, starting the month of January, maybe a little later once IIM has all the data, and that also I'm assuming would be representative, would not cover all retail outlets, but would be representative of the industry. We'll get what the retail outlets sold, I mean dealerships sold to individuals as well. The reason why that is important is because it'll tell you the difference between wholesale and retail, what is the inventory level lying at dealerships. So sometimes, you're stuffing the channel, but at the retail level, sales are not that high. Yeah. So there will be transparency in that sense. Once you get both the wholesale and the retail numbers. So that is something we'll take note of. We'll have our auto analyst join us as well in just a bit to talk about Hero, the comment from Mr. Munjal, and of course the other companies which have
Prashant,
already reported.
I just want to come in on this because Hero Moto is now down around 2%. Just a couple of weeks back, I think on the 24th of December, there were two downgrades which came in for Hero Moto as well. There was one from Goldman Sachs as well as the other, which where Ambit reiterated or maintained their sell. So they both have been concerned really with regards to, Honda's market share having a direct impact on Hero losing market share in the two-wheeler market. So I think this December sales is also indicative of the fact, or it's evidence of the fact that yes, there is some amount of market share loss which is taking place for Hero. And though they have said that maybe Q4 onwards there should be a pickup, but maybe this Hero Moto Corp discussion probably needs to be fleshed out a little more, and maybe it just needs to extend to the change or the dynamic change which is taking place.
There is one more comment. Industry is expecting a turnaround in the fourth quarter, Jan to March. So we'll see if that happens or not. 2.25% lower. The stock is slipping as we speak. We'll come back to the autos in a bit. Sudarshan Sukhani of S2 Analytics is joining us right now to take us through what's happening on the market. We're down 33 points. We're off the lows. Sudarshan, morning. What would you recommend one does as far as the index is concerned?
Good morning. Well, we are now in a trading range, and I would expect this trading range to break on the upside. So traders should be long, because yesterday there were opportunities to go long day before and I spoke about it. But if you are not long, then use this dip to buy into the Nifty and to buy into the Nifty Bank. I do not think that we are actually going down. So this is just preparatory to hopefully a final move on the upside. So that's the view on the indices. And that reflects on my stock picks also. Rather than going to areas where some kind of a, downtrend is visible, autos, metals, we would prefer to go with defensive. So consider buying Sun Pharma. The stock is building a base and is now slowly getting ready for a big move on the upside. Buy TCS, IT stocks are doing well. In the morning also I spoke about how we should be looking at Tech Mahindra, Infosys. now in the daytime, TCS is the appropriate choice for the rest of the day. So Sun Pharma and TCS are buying opportunities, and so is UBL, United Breweries. United Breweries has been an outstanding performer, and stay with it. Stay on the long side.
Okay, well, autos is the big discussion point this morning, Sudarshan. So any recommendations there?
Well, just avoid the sector for now. Don't go short. These are only small blips in an ongoing up move.
Okay. All right. Well, we have a Twitter query as well. We have Suraj Nadrajan who wants to know the view on M&M Financial for the short term. Sudarshan.
Well, I would think M&M Financial has been an outperformer, and given the nature of the market where I am upbeat, it should see higher levels. So in the short term, I would not be surprised. I would expect it to see somewhere around 500. So if you own it, hold on to it.
Okay, Sudarshan, thanks very much. Appreciate you joining in with those trading ideas and that advice for our viewer. We get back to the story on autos, which is the big one, and the general disappointing numbers we've seen for the month of December. Stocks, of course, are weak on the back of that, as like yesterday. Aditya Bapat is auto analyst at IIFL Securities, and he's joining us right now on a phoner to take us through what he's making of these numbers. Aditya, thanks very much. First, I mean, if you could weigh in on the Hero numbers, I mean, again, below expectations, and I'm sure people would note that comment from Mr. Munjal saying that, well, there is an urgent need to bring down rates to 18%. What do you make of it overall?
Actually, I'll begin by commenting on the sector as a whole, or rather, I would say the numbers on the whole that we have seen. So, for the sector as a whole, you had your usual culprits by way of, say, weak sentiment or higher fuel prices, and the tight liquidity, then the higher interest rates that we have in the system. And most importantly, what happened during this month specifically was that since we have had a weak festive season, there was a lot of stockpiling that happened at the dealers' end. So, logically, what the companies have done is that they have reduced their dispatches to dealers, and this is something which has led to the entire slowdown. So what happened on the whole is that despite companies announcing a lot of new launches or giving a lot of discounts, none of it actually led to strength in the auto numbers as we saw them. But what I expect is that this kind of inventory rationalization could play out in December and partly in January, and after that we can hope that things get back to normal. Rather, we can see some normalcy coming back to the sector.
Okay. Aditya, so for Hero in particular, do you think that there's a structural problem that they're dealing with, and it's not probably just an inventory build-up or, the economy possibly not working out for the previous few weeks? What I'm trying to say is that there's a loss in market share all the way to around 50 to 52 odd %, if I'm not mistaken. So is there a structural problem that you're dealing with?
I won't exactly call it a structural problem, but yes, one thing that I feel is that Hero, what they need to do is that they have been holding on to their share, or rather I would say their segments, for quite some time. It is actually time that Hero also starts exploring the higher capacity motorcycles and the basically higher engine capacity segments. And that is because that is where most of the growth or most of the incremental growth is coming on. So that is something that Hero needs to explore in a big way. I feel that they have already made a start by announcing, launching higher capacity motorcycles and scooters in the recent times. So I think the company is on its way to sort of change course.
Aditya, we'll get the retail numbers also from January, as we were discussing this earlier. What would be, I mean, how useful would it be as an analyst for you, and what would you want to watch out from that number? From those numbers?
Well, actually, I think the retail numbers have just come in, so I haven't had a chance to look at those numbers per se. But if you can tell me the number.
No, we'll get it. We don't have it yet. We will get it because I mean that I would assume that would take some time, right?
Yes, absolutely.
Yeah, the companies can report straight away, but what's happened at the dealerships will take some time. No, but how useful will that be for you as an analyst?
I'll tell you one thing that if I go by channel checks in recent times, then what I have seen is that I'm like this is across all the three listed two-wheeler companies and not just across Hero. But at the dealer end, if you go to see, they don't see too much of weakness, or at the same time, they're not, barring the festive season, I'm talking about post-festive season, the companies or the dealers haven't complained that much regarding weak demand. So I think it is only time, say in a month's time or 2 months' time, that we start seeing the numbers getting back on track. So this weakness should play out, or rather it should end in, say, about a month or two.
Okay. Aditya, what's your view on Ashok Leyland? That stock is just about holding 100 rupees now. You know, it's been a seminal fall for them last year. This December sales disappointed. There's been a management change which is going to take place at Ashok Leyland as well. So what are your thoughts possibly going into this year?
Absolutely. Well, the company has seen certain disruptive events, no doubt about that. And even for the month of December, the volume growth, especially in case of MHCVs, has been pretty weak. But on the whole, what I feel is that, if this MHCV is not doing good, they are seeing good momentum as far as the LCVs are concerned. And these have been powered to a large extent by the e-commerce and, preference by small freight operators and all that. So, being a pure play commercial vehicle manufacturer, we feel that the company should continue to do well. Another reason why I'm, pretty optimistic on this company is because if you see the macro data, like say IIP numbers or data with respect to mining or infrastructure, you don't see a huge disappointment on that front. So, some of these factors should keep powering the stock going ahead.
Okay, Aditya, it's a pleasure. Thanks very much for joining us with your opinion on these numbers that we've got. And thank you very much for joining in once again. So that is autos. As more numbers trickle in, we will continue to go back to that story and get you more opinion. We take a very quick break here, the first on the show. I think down about 35 odd points. We'll leave you with some opinion. And this is coming in from the auto industry leaders on the demand situation and the outlook going forward. Listen and take that break. We are back with commodities on the other side.
January, February, March should see sort of true reflection of where the demand is. I would not say that there has not been some softening of sentiment, some softening of demand. There has been. But I think it's all led simply by what happened in October and September because of everything kind of being wrong at that time. The interest rates, the exchange rate, the oil prices, commodity prices, and I think that's what we are seeing in November, December also. And therefore, I would expect some turnaround in January, February, March, though I must admit that last year, January, February, March was a very high base, and therefore to get a significant increase from last year will be a reasonably difficult thing to do. I'm not at all concerned about market share. In this industry, as I've always said, nobody gains substantially in a given year, nobody loses substantially in a given year, and a little bit up and down keeps happening. Last year, January, February, March was a very high base year. And therefore, I would be very surprised if we see in the industry a significant growth over last year. As of YTD December, the industry is at about 13.2, 13.3% growth. I would expect that the fourth quarter should be between 0 to 5% growth. And therefore, we'll end up somewhere around 12% growth for the industry, for the tractor industry.
The domestic commercial vehicles, you see a decline because you see last December was a little bit of a bumper month because there was a significant release of permits in Mumbai, and in Mumbai market we have like a 95-96% market share. So you're seeing the base effect, but we are not at all concerned about any slowdown in the CV domestic business for January and February, March. I think that we should start to see slightly better numbers, growth numbers for the domestic motorcycles industry. Large parts of Africa and the entire Latin America in exports, the retail sales peak between a period of October to December. you will actually see a slowdown in the exports business from December to Feb. And but the underlying, there is no underlying issue over there. We will see slightly lower numbers in exports, but that's just a season effect.